Today, it's Edwin's Monday evening property rant. Hello again, it's Martin North from Digital Finance Analytics, one of those posts covering finance and property news. Another week, and Edwin is back for another rant. Hi, Edwin. How are you this week?
Well, I feel a lot safer than you, Martin. You're a lot closer to the bombs, right?
Yeah, I can't quite hear them, but I noticed that some of the B1s and the B2s are now landing in Gloucestershire, just north of me, to take off. And you just, well, what, hell in a handbasket springs to mind. There are so many things that we could talk about more broadly, but let's focus in on the question of what does it mean for real people, particularly those perhaps in the Middle East already.
This is the interesting thing, and I come up with this side, with this part of for our presentation for tonight, with regards to obviously the influences that have been living there, tax free in the tax haven. Money laundering tax haven of UAE and the Middle East somewhat. So now they've got to make a decision to come back. Obviously, they're infuriated about the fact that they feel they're not going to go back because the government's arresting and putting anybody that's basically spruiking bad publicity. To the rest of the world, to the broader world, that they're put in jail. There's a lot of stories going on. There are a lot of WeChat chatterers there, as a matter of fact, because they're one of the biggest contingencies. From memory, if my memory serves me right, it's about 30%, 37% of people that are bought. People from out of the region that are bought in the UAE are actually Chinese nationals, and the Chinese have put a lot of money into UAE. And there's some stories over WeChat of people wanting to get out. There's this lady, particular story that Dusty was sharing with me, and this lady actually bought 6 airfare tickets to get out of the place. And you're going to ask, why did she buy 6? It was just her and the daughter. Because her theory was that if one plane was cancelled, she'd be able to jump onto the next one. And sooner than later, the international travel was going to stop. And eventually, she tells a story that she spent 320,000 yuan, which is divide that by 5, and you get the Australian dollar equivalent. All right. So these are all the people that are leaving. Now, where are they going is the focus, obviously, of tonight, or where do they propose to go? And this is a lot of expats. We're talking about 130,000 expats that actually live, Aussies that live in the UAE, in Dubai, or across the Middle East. Most of them in the UAE and Dubai. 130. That's a lot of people, and a lot of them, you can bet your bottom dollar they've got a bit of coin behind them now. So the weekend I spent up in Queensland, visiting some old mates there, and visiting a group there that we're proposing to be working together with, expanding our buyers agency network with Century 21 up that way, up that part of the region. I couldn't get away from the Gold Coast and Brisbane quick enough, Martin. What I saw was absolutely. I'll put some videos up on my X handle, but what I saw was absolutely shocking. Absolutely shocking in terms of the prices, in terms of the type of different structures, in terms of the need for rectification work, the need for newer buildings that were already dilapidated, older buildings that needed a lot of work, even the old 3-story, 2-story walk-ups, the back of the Sunshine Coast and that. That will need a bit of a lot of attention, but yet the prices. One particular unit that we saw, a 1-bedroom unit, there was going for $600,000. 1-bedroom unit, 1 bathroom, was no bigger than 48 or 52 square meters at best. It was for $600,000. So then, looking at the broader landscape of Brisbane as well. Around Logan Central, those areas, Woodbridge, those areas around there. And it was alarming and scary. The values went to Little China. all those areas, and the prices. It was just gobsmacking. So then, obviously, and this is what we sort of leading on from last week's conversation, which was, where are the expats going to go? Where are the people going to move back into? It's going to be predominantly around the east coast of Australia, from your Brisbane's Gold Coast, Sunshine Coast, to down the east coast to Sydney, predominantly in Sydney. Many will think twice before they go to Melbourne for obvious reasons. But the scary thing was, Martin, that so many locals are just being absolutely priced out, right? And when you start talking about $1 million investment properties to get into that market, you have to start questioning how long before Queensland locals start eyeing out our property in the outer regions of Sydney, right? And that's my call. That is my prediction, my new prediction for 2026. Watch this space and watch watch the migration for local Queenslanders. Will pack up, and it's actually cheaper to buy property in the Sydney region, in the outer regions of Sydney, than it is to buy property up there. And I believe, from what I saw, and from what I was also told and informed that we discussed with our groups up there, I believe that there's better choice also for employment here than up there. So my money is on a southward migration. There'll be a northward bound migration from wealthy expats. We met quite a few expats. We met quite a few New South Wales people, Sydney siders that have literally sold here. Packed up stumps and moved to the Gold Coast. And for me, it's the Gold Coast, those areas are really retirement villages. There's nothing to do there other than sunbake, get roasted, get blisters, and get sunspots and cancer eventually. Other than that, why would you go there? But a lot of people have migrated there for lifestyle, and that's a lifestyle that's going to be appealing for a lot of the people, expats coming from the UAE.
Yeah, I think it's very interesting. Of course, your number 10 prediction start of the year was about escalating geopolitical risk, fears coming off the back of that. Whether it's a hot war or whether it was a perception of war. Well, guess what? We've got a hot war now. But expats returning, and Australian PR holders moving capital back to Australia. And interesting times there. But the other interesting observation, which I think is just building on what you said, I've been looking at the investment property net yields across Queensland. And a few years ago, they were very, very good in terms of property investments, both from a growth perspective in terms of capital appreciation, but also on a cash flow perspective. That's completely changed now. So what I'm seeing is, in fact, that the net investment yields, which of course is the real way to measure a performance investment property, in my view, to take account of the costs of the property, have gone through the floor. And so what we are finding now is that, again, from one of my conversations recently, that there were people who actually were looking to invest in investment property up in the Queensland area and now looking to get out. And guess where they're coming to? They're coming back to look at Sydney again, because, as you say, relatively speaking, maybe the proposition is a little more attractive. So I think that tilt back towards New South Wales could be quite interesting, particularly, of course, with the other issue, which is costs of getting around the place, because, of course, Queensland is pretty spread out, and so the cost of fuel is pretty high. In and around Sydney, it's more compact.
The areas that we grew up in, we obviously attached them for various reasons. But I can really see the migration coming down southward because people just can't afford it. And one of the principal, or the leaders of one of the groups there that we were talking to, he said, Edwin, look, it costs $1 million to buy an investment property in Queensland now. Something relatively. That's going to sort of go through the test of time. $1 million, and it'll be something new. So plus the stamp duty, you're going to be basically doing your ass for 2 years. You're going to be in the red, upwards of 1.1, 1.15. Okay, you've got your $30,000 per annum negative gearing strategy, and government kickback, as I call it. But at the end of the day, you're still in the red. You're hoping and praying that the properties are going to go up in value eventually in your third, fourth, or fifth year in order to be in the black. But then he said, why? When, from what I've been telling them of properties that we've been getting our clients here, in just the outskirts of Blacktown for just around the million, and with a greater potential. So that's from a figures point of view, from a numbers point of view. But for me, Martin, from a structural point of view, the shit that's being sold there and what's been built there is absolutely I'm gobsmacked. It would seem that the NCC doesn't apply to Queensland, in my opinion. And with the weather patterns that you get there in the areas that but you only have to look at the properties that were built for investors, for the Japanese investors back in the early 90s, to what they look like now. I mean, they're absolutely riddled with all sorts of issues, from your wood rot to gutters falling down and rusting out. I mean, they are literally deteriorating away. And the strata laws and the strata regulations there, it's just a wild west as far as I'm concerned. So this is why I feel for the first-time buyers. I feel for the younger generation that are trying to get into principal places of residence here in New South Wales and in Sydney, because once that dial turns toward back down south, and investors start basically not putting more money in your Queenslands and even in your WAs, because there it's just as expensive, almost as expensive to get there. And as we said, you have but they're one-trick ponies. They've got other inherent issues with your investment strategies there. So when you start looking at your Sydneys, and we'll talk a little bit more about it later on. And this is where I would beg to differ with SQM's realignment of their predictions.
Yeah, absolutely. Well, we might touch on that. Just to develop the argument slightly, this was my show that I put out, property investors and property renters both being crushed, because, of course, the fact of the matter is that we are seeing more property investors still struggling with cash flow. What they're trying to do is put the rents up. But, of course, the rents are now being capped a little bit because, well, those people wanting to rent the properties don't have the money to be able to actually pay more. So when you actually do the calculations, Edwin, it's quite fascinating to see just how really adverse some of these property investments are now, and how it's badly affecting pretty much everybody who's actually involved in the property sector with an investment slant. And it's interesting, Richard Dennis the other day made this really quite weird point. Australia actually has more than enough houses. They're just owned by investors, as though somehow if you sort of turned investors off, then you'd solve the housing crisis. I'm afraid that doesn't ring true to me, because, of course, if you look at it historically, it's been the mum and dad investors that have been the cornerstone of providing homes for the rental sector, because the government walked away, less public housing. And I know that they're bringing in the build-to-rent mob, but of course the build-to-rent mob are going to actually have to charge a lot more because the cost of construction are now a lot higher. Quality, of course, is another question. So again, you can see how messed up this whole thing is. And just on the sort of how messed up it is, didn't whether you saw this article, this is quite fascinating, that they're now talking about more and more people, millennials, are facing a grim retirement, because guess what? They're holding their mortgage way into retirement. And in fact, this article made the point that because of this, and because of the fact that the mortgages are a lot bigger and people are actually investing later and having to actually continue to pay mortgages into retirement, many of them are having to raise superannuation ultimately to to solve their financial straits, which of course then means superannuation was meant to provide income in retirement, but it's not. It's just going to pay the mortgage. So you can see how messed up this all is. And I have to say that I believe that standing back and just thinking about it, there's a lot of things coming together in a not a very positive way. In fact, I made a show called Slowly Then Quickly as, quote, fear grips, unquote, the property market. And that related to the AFR, who came out with the fear and anxiety grips auction market. Australia's East Coast dominated housing market is cooling, with more homes being offered for sale at the same time as prospective buyers grow cautious about the cost of living and rising interest rates. And Shane Oliver made the point that the clearances are continuing to cool as well. So there's a lot of noise out there. Again, I have to say that these aggregate averages don't tell you very much, but I think it's important. We keep saying it. You got to look at the individual circumstances, individual situations, individual properties. But I do see a lot of these factors coming together and not in a good way.
Tell you something else, Martin, that I didn't put in the notes because I didn't know how to put it on the notes for our discussion tonight. But Dusty's been almost all day in one of the main tribunals in Sydney, in NCAT, and she sat through 6 or 7 eviction notices, and in that. In her observation, as she shared with me afterwards, was the majority of them were they were eviction notices. They were final appearances, and these are people that have been 90 days in arrears, 120 days in arrears. They've prolonged their tenure in a rental. But most of the eviction notices were around. People that were holding student visas, young families that have come in legally, with student visas in the IT industry. And Dusty was absolutely saddened by what she witnessed, and this is something that's not discussed and not talked about as to who is facing the full brunt of what these immigration policies have created, where in fact it is going to be absolutely hard for these individuals to ever gain a rental property, no matter what part of Sydney they're into, other than your private rental accommodation that we shared that story a few weeks back, where you're basically sharing homes with unknown individuals. And these are young families that have done the right thing. These are young families that have applied legally, but for the economic circumstance that we're facing at the moment, they've had the small businesses that they were working for on a part-time basis, casual basis, whilst they were attending university and whilst they were pursuing their academic careers, properly. They're unable to work. They're unable to attain that. Now, apart from that, the majority were students. They then said there was one lady with a single lady, and she was waiting for her super to. She's got access because became a single mother for one reason or another, and she's been waiting over 97 days or so for and she for a super to be able for her to be able to access the super. And there was no help whatsoever from the authorities, from any other bodies to expedite that, and she was going to be put on the street. And it came to the landlords to basically give them extra grace to stay. But how much grace do you give when, in one particular case, the property that was the elderly couple that owned the investment property that relied on that because they didn't get the pension because the Mings test didn't allow them to get the pension, whatever. As I keep on saying, there are a lot of elderly people that are asset rich but cash poor, and they're relying on other investment structures in order to live their daily life. So, how long do people wait for them to sort themselves out? How much grace did they give them? And she came out of there pretty much in tears after hearing all that. And this is the structural issues, the social structural issues that aren't discussed readily. And this is what happens when you've got mass migration and uncontrolled migration. And this is where you've, because she said a lot of it came back to obviously that that lever that you and I were the first to break. What was going to happen before it even happened, and unless you start addressing all the five pillars that we often talk about that have got us to where we are now, we've got a lot of problems, and we've got a lot of social problems as well. And it's only a matter of time before we're going to end up with the same unrest that you're going to find that we're finding in other states.
Yes, I think unfortunately things are looking quite bad for many people who thought that the property angle was the way to provide security into the future. And it's not a one-way street. There are some significant issues. And I guess we should just reflect more broadly. I made a show, markets, households and businesses all held over a barrel, of course, because we've got the Middle East stuff going on. And we've got Jim Chalmers now suggesting that inflation could reach nearly 5% as the escalating Middle East conflict adds pressure to the Australian economy, which is not good and not totally surprising, unfortunately. So, of course, that begs the question, well, will the RBA move or won't it? Just on that, it's hard to know because, of course, the RBA is looking at inflation. I made a show called Hold On, Rates and Inflation Are Going Up, But Why? Because, of course, we've actually built a lot of inflation into our local economy because of the policies that the government have actually been running with. And, of course, now Albo and Chalmers has a perfect alibi. Should we see interest rate hikes next week, they can blame Iran, right? So in a way, it's rather more convenient. Although I make the point, Campbell Newman tweeted, interesting that they talk about the gouging from fuel companies and things, but just bear in mind, of course, that if oil prices go up, well, the excise goes up too. So effectively, it's time the media turned their attention to the fact that 72 cents per litre on tax, right there, we are being gouged by our own government, which is absolutely spot on. And, the markets are saying, yeah, well, the RBA cash rate probably is going to go ahead, maybe up to 4 to 4.5. And the bond rate is saying, yes, it's, 4.5 is, this is the 2-year, could well be there. So I will be interested to see whether the RBA does move like the major banks think, or will they actually hold off saying, well, we've got too much uncertainty and let's see how things are going on. But my point is, a lot of the pressure's already baked in. A lot of the pressures don't come from Iran and what's going on. We were already drifting towards the rocks before the Iran thing is coming over the top. But I think that the Iran story will become the alibi to justify a whole lot of things. And I wouldn't be surprised to see the government throwing more money at the property market to save the market.
Which is the fundamental, the structural issue. One of the main issues is throwing and putting people in that situation, in that teetering on absolute bankruptcy. This is where the issues are going to arise in certain markets, like you and I've can concur with, and that is can agree on, and that is the your 5% deposit guarantees, where people got into new developments, into the outskirts, in the fringes of capital cities, where they're paying a hell of a lot more to get to commute, and paying hell of a lot more for health and everything else that they need. So everything is compounded on that, and you've got people that are literally struggling. They're up to their eyeballs in debt. But on the other hand, you've also got the as I said, expats and new PR holders with money coming into Australia, and there's going to be a hell of a lot more. So in a way, for many markets, more to the point, the Sydney market, that is going to be like a Mexican standoff, you could say, because and that's going to save a lot of the markets, other than the ones that are sitting on the fringe or on the fringes, because not everybody wants to go out and live in Box Hills, in your Riverstones, in your southwest regions of your 320, 280 square metre blocks of land, absolute heat boxes. because that's not where they want to be. And so the cash-strapped families, young families, are fundamentally the ones that are being thrown under the bus. And as you said, the government's just going to throw more money at it to get new bunnies or to get new sheep to slaughter new sheep. On the guise of buying votes and doing the right thing by first-time buyers, when in actual fact it's more detrimental. Now, and I go back to where I stand on. One of my strong pillars that I stand on in a lot of my arguments, and that is, but for the main reason that no matter whatever happens in the Middle East, whatever happens in the Asia Pacific region, whatever happens with AI and people being put off work and let go and everything, unemployment and all these pressures, and even interest rate rises, we've got no construction. Or we've got very, very little. I mean, minuscule in comparison historically. So that counters a lot of what we're seeing in New Zealand, what we're seeing in Canada, what we're seeing in other parts of the world. And we're really not slowing down on the immigration policies anyway. I believe that there's going to be a lot more doors opening up for wealthy migrants to come into Australia, because without it, Australia doesn't function. And this is where the government, even the Labor government, surely they can't be that stupid, and they've got to see the fact that the more small SMEs, the small to medium enterprises, the more they close down, the less work available. The less taxes, and the list goes on. Unless you want to keep on building the workforce, the government employment workforce. But how many government employees can we have before there's no money to pay them? Because you have to have productivity in order to pay them. So that is what's saving a lot of markets, in my opinion. The lack of construction, the cost of construction, which then again creates that lack of supply because of these other areas that are pushing away. If we didn't have the Middle East conflict that we've got now, and any other global conflict, and let's strip away even AI, I reckon, Sydney would be, and many other markets would be screaming. We'd see higher, in terms of price points, but so we go back to that principle that we've got to look very carefully at the markets that people want to go into, or people are looking at getting into, and the type of property. Because you look at the policies in Victoria and the policies in New South Wales and Queensland are a lot different from a government perspective. And nobody wants to build in Victoria, but you look at looking out the window of one of the places that we had lunch at, looking down at the landscape. Shit, we counted something like 27 cranes. Something I haven't seen in years. In any part of any suburb of Sydney, whereas before we used to joke around the crane index of Sydney, where there was upwards of 450.
Absolutely. Well, yes, there's been a lot of construction up north of Brisbane, and also down around the Gold Coast in particular. And I'm seeing some significant stresses and strains. I'm talking about the stresses and strains. You mentioned the 5% deposit. This article from the Daily Mail really, I thought, brought it home quite nicely. Urgent warning for Aussies who bought a house with a 5% deposit. And it said that Aussies who paid for their homes with a 5% deposit have been warned they risk dangerously high levels of debt and defaulting if the cost of living crisis worsens and the cash rate continues to rise. And they quote the fresh APRA data that showed there was a jump in risky mortgages. And the scheme now accounts for a record 4% of new owner-occupied loans. Of course, that's on the back of the government policy with the 5%. And ABNP chief economist Shane Oliver told the Daily Mail the scheme is encouraging inexperienced buyers to take on debt they may not be able to manage, these buyers are getting in with much higher debt levels, and that risks more first home owners running into trouble down the line, he said. And he argues that the policy may help young people secure homes sooner, but is increasing competition at the entry level of the market where affordability is already under strain. To which I would add, Edwin, of course, if in fact also now you start to see home prices drift lower because of the supply demand disequilibrium and everything else and the higher interest rates, that 5% deposit that they've got will shrink. And therefore, the equity question comes into mode too. And again, what we are seeing is government short-termism coming home to roost and hitting ordinary people. And I keep getting frustrated by this because, it may sound good as a sort of a soundbite. It may sound good as a piece of media coverage. But actually, the consequences for real people who get caught on the wrong side of the deal are pretty dramatic. Oh, and by the way, of course, later on in the year in May, Chalmers is now saying he's going to have a reforming tax budget, which presumably means tackling the capital gains and negative gearing and things as well. So, there are more issues in the pipeline here, which again may have an impact on the market. So, yeah, you have to actually be very careful about what you do, where you go. And I always say to people, make sure you do the math and make sure you assume that rates could go up rather than down, and if they do, what are you going to do about it?
Well, one thing people definitely have to do is don't assume, because that just, as Ben Hill used to say, that makes an ass out of you and me. The more you assume. So you just got to be careful as to what cities you buy into, what areas you buy into, what type of dwellings you buy into, and with what borrowings or what have you got. A bump in that journey can put you in the red or in negative. Yep. And that's what we're going to see for many markets, especially if interest rates do go up another 25 basis points and soon, and because fear is going to grip a lot of people as well. The cost of living is just going to get more expensive. But again, like I said earlier, and that is that what's going to save a lot of areas, a lot of markets, and I'm still predicting that there'll be quite a number of areas that we've given an eye on for our own purposes and our own clients. Is they will experience your 10-15% rises because of the sheer demand for various reasons, whether it's education, whether it's lifestyle, whether it's religious, whether it's just simply a type of property. A lot of it rests on lifestyle, and also the price point in comparison to everything else, and proximity to transport in future works. So be very, very careful. But the question of AI, Martin, I don't know whether we're going to very soon we're going to have an AI Martin or AI DFA. We're going to have to find out, try to work out ways whether or not you're an avatar or you're for real, Martin.
Yes, well, people can decide for themselves, I guess. The fact of the matter is that AI, of course, is meant to take over the world. This is the Anthropic story, right? So you can see here the theoretical capability versus the observed usage by occupation category. And you can see here that management, business and finance, computer and maths, architecture, engineering, legal, arts and media, office and admin are all potentially the most significant. By the way, insulation and repair and construction, not a lot. So, maybe being a plumber is a good solution to this, or maybe healthcare. But it's interesting also look at the difference between the observed versus the theoretical. So there's a big gap between what the hype is saying and what the reality is saying. But nevertheless, it's fascinating if you look at the WeChat chatterers, Edwin, and what they're saying. Well, maybe AI is beginning to change the workplace in some areas.
This is the thing, and this is the observation from the WeChat chatterers, and we've got to really pay close attention, because what they're saying is, and we'll bring it back to property. What they're saying is we really need to look at China, because China was ahead of its time. And a number of things that happened in China. One was, there's a reshuffling of property wealth. Understanding who's buying, who can buy, and who's actually, who's lost out, and who are the new entrepreneurs, or who are, how's that reshuffling going to happen? We're seeing the ones that have been highly leveraged there, they absolutely hit the wall as well, because they also got into government incentives and government schemes. So this is really the, China is the grand global rehearsal, they're calling it, as to what could potentially happen to the rest of the world. And the witcher-tatterers that are talking about it here in Australia are talking more about the reshuffling of property wealth. And what the correlating what happened in China with what's happening here, and that is the government workforce. Because over in China, if you want to have security in your future as a young person, well, you go and join the CCP. You better start working for the government. You better kiss up to the government. No different to what's happening here, Martin. Security, loan security, borrowing capacity, borrowing security. Obviously, if you've got a government job, you're going to get preferential treatment. And the reshuffling of wealth, the future millionaires, multi-millionaires, and property moguls are going to be those in the trade. The blue collar workers and that's what they are saying. So we obviously this. Some say are asking the question: is it going to take 12 months? Is it going to take 18 months? Is it going to take 2 years? I think 2 years is very much wishful thinking. I think it's going to be a lot closer than that, when we're going to see a lot of big reshuffling and a lot of the workforce being put to pasture in the white collar space. I'm writing an article at the moment as we speak that I'm going to post on LinkedIn, and I'll attach it to this rant when you post it up on X. When I finish it, and it's all about the diminishing numbers in the real estate industry. I'm adjusting my numbers, my figures. Like if a square meter research, and Louis Christopher can readjust his, I can mine as well. So I'm adjusting mine to. I was calling a 30 to 40% attrition in the workforce and in the office presence, real estate office presence in across Australia, because of the new layers of legislation, AML and cybersecurity, and now AI. But you add AI and how that's going to revolutionise the industry, and that's what the article is all about. And I'm predicting that potentially by the end of 2026, we could end up with 50 to 60% of the workforce on the out to pasture, and you better find something else to do. But that's going to be an interesting article as to what point out. But this is what's going to happen, and this is my conference with one of our. A couple of our followers that are in that space at a global scale. They watch our show avidly, and they're the ones that are talking about how it's going to hit a lot quicker than what a lot of people expect.
Absolutely, and I think nobody quite knows, but some of the early marking of the cards are there. I will make this point: if you go back to this chart here, grounds maintenance, in other words, gardeners, are actually not expected to be replaced by AI, I guess, because they've physically got to walk around. Although actually, if you actually incorporate AI into humanoid robots, maybe you could have humanoid robots doing your gardening. I don't know. So I'm not quite sure whether that's the full story. But yeah, the point is there's so much uncertainty with regard to how this plays out. But I agree with you. This is moving very, very quickly. And the truth is, of course, that there will be a lot of people who would have thought that their jobs were safe and secure into the future that may suddenly find less so. Now, you mentioned SQM, and of course, Louis Christopher did actually make some revisions to his scenarios, and it's quite fascinating, right, to look at what he's actually saying. Basically, because he's saying, well, the SQM story of scenarios needs to be updated because of the impact. Global events can have a direct impact on Australia's housing market. And so Louis Christopher actually goes through that. So he's looking for potentially some significant slides in some areas. So, you can pay your money and you take your choice. But question is, what do you think? Is he right? What's your latest, Edwin? You can change your scenarios too because things change.
Change my scenarios with regard to the industry, the attrition in the industry. So, but look, Christopher, Louis Christopher does make a point, right? It makes valid points, and the market's going to be very fearful. But look, the first thing is that emotional side of things, right? People are going to investors either going to have one or two things happening. The investors are either going to dump property or keep property. I'm of the opinion that the investors are going to hold on to property a lot longer than what because it's in my second point will ratify my first point, and that is that but there's more security there. It's a more secure. It's been proven to be a more secure investment in many ways. Now, things that like Louis talking about a fall in Sydney market across the board of 6%. And Melbourne 4%. Look, I'm with Lou on that, but I think it's going to be greater in Melbourne. I think the fall in the Melbourne market, because of the entrenched issues that we've already got, is going to drive that even further than my 7 to 10%. It could potentially drive it to 12 to 15% for the Melbourne market, but Sydney stands alone. Sydney, in my opinion, stands alone because at the end of the day, 60 to 70% of the population that come into Australia will gravitate into the Sydney market, and I do believe that there's going to be a southward bound migration from Queenslanders, because things are just getting stupidly expensive there, and all these expats that are coming back from the UAE and everything, they're even going to inflate those markets even more. You've got a lot of greater choice in the Sydney market than what you have in a lot of other markets. You've got your beaches, you've got your northern beaches, you've got your eastern suburbs, you've got all those areas, but you've also got your inner wests, and you've also got your mountains region. I think there's a lot more going for Sydney than many other capital cities. But this is my pièce de résistance, Martin, and that is that fundamentally there's not a lot of construction. We go back to the point of construction, Martin. We go back to the point of construction. Raise the interest rates, and it's going to be costlier to build. Issues with transport. For some of our trades teams, they are now asking anywhere between $100 to $300 extra per week as an extra payment per week in order to undertake a job because of the cost to commute, right? And we can't argue with that, right? We can't argue with that. So it's going to be costlier to build, costlier to renovate, costlier all around. And that's what saves the Sydney market, because we are not dialing back on immigration. So we're not dialing back on immigration. Construction is going to be more expensive. We go back to basic principle of supply and demand, Martin. So unless they find ways to release those properties that are being held vacant, unless they find novel ways, and we dump 20, 30,000 properties on the market in the city market, and we're not going to have that. We're not going to have what Louis' adjustment to his his downgrades to his predictions. I believe that I will see in 2026. Many markets in Sydney go up by 10 to 15% even.
Yes, and interestingly, the consequence of this will mean there's a reshuffling of home ownership, right? From the white collar groups who are being hit by AI and everything else, to the blue collar workers who are actually making a lot more. And I see it in my surveys if I look at some of those income flows and where they're coming from. So actually, we're going to see some interesting shifts there as well. I suppose black swans, accepting and, without wanting to scare the horses, there was this that China has surrounded Taiwan with 26 warplanes and 7 warships. Again, well, I keep running these exercises. But, I can't help thinking, Edwin, if I were China and thinking about how to actually deal with Taiwan, the fact that the US is now caught up in the Middle East, is this an interesting time to be a little bit more aggressive? What do you think?
This is the thing. This is is it too much for Trump to manage? Is it something that shit was it's going to happen anyway sooner than later? It's going to happen anyway. Let it happen now. And the different guy is it. But whatever happens, it's outside of yours and my control, right? But I tell you what we can see from this is the prediction number 10, and that is that fear of escalating rumors of war and wars in the Asia Pacific region. So we're going to get a repatriation of more money coming in, and this is where people are going to have to put the big boy pants on and realize the fact that hey, we got a lot of expats coming home. The more unrest, the more global unrest we find, the more we're going to have. Now, we've been introduced by one of our followers, one of our avid followers of the show. We've been introduced, or Dusty's being introduced to one of the leading migration lawyers that's actually looking after the Americans wanting to come into Australia. And guess what? That group of people, potential group of people coming from America, seeking PR and seeking, to get residency in Australia, to migrate to Australia, that has grown by upwards of 300% in the last 12 months.
Yeah, I think one to watch, absolutely. And just coming back to property specifically, another thing to watch are these latest moves with regard to advertised price guides. So New South Wales property sellers will be forced to advertise their price guide, and real estate agents who break new underquoting laws will be fined 3 times their commission in legislation to be introduced this week. That's according to a recent article. And the new laws will stop agents from advertising a sale price lower than a previously rejected written offer or the highest unsuccessful bid at an auction, and there are penalties for dummy bidding as well. And of course, Victoria has gone down somewhat the same route here. And I suppose superficially, Edwin, you might think, well, this may sound like progress with regards to dealing with the underquoting, but actually, of course, it's a question of will there be follow through or not? Because as you said in your tweet, you can say for years increase the fines and prosecute troublemakers, and we may begin to see some change. May, though, rests on what, Edwin?
What you and I and others we've been talking about for a number of years collectively, and I've been talking about this since 2010, 2012. And talk about the underquoting and all the new programs, all the new legislation, all the new regulations, all the new plans, all the new this and the new that. It's not going to work. You can even increase the fines to $300,000. Yeah, it'll make some think twice before they do it. But guess what, Martin? Unless you've got a real a workforce policing, the regulators policing the industry in the way that they should be doing, unless you're going to have that, well, you've got, you can whistle Dixie, right? So that's the first thing that's got to happen. You've got to have real people on the ground in order to make things, to make it happen. The other thing is you've also got to have the real estate industry itself needs to push against the bad apples in the bunch. Collectively, there has to be a collective, and I can assure you that from my conversations in the industry with my colleagues, the people that I keep in contact with, everyone, in my discussion, I would say that 60 to 70% at minimum would agree with us that collectively we should create a collective voice, a unified voice, and speak out against it, and be the ones that speak against, or you could say dob in. I don't really want to use the word dob in, but we should take have a collective voice to curb these these issues. And until we have that, it's not going to happen, Martin. It's not going to happen. And I liken it to when mum and dad split up, we ended up in the West, behind Cabramatta, and at that time, I grew up around that area. I spent a few years in that, before I left home. I spent a few years there, and I got to see the T, actually mix around with some of the T5 gangs, and in my late teens, early 20s, got to know quite a few of them. And if you recall back then, the Cabramatta was the epicenter, was the capital, the drug capital of Australia. It made global, it made global news. Even that politician that got murdered at his front door. Can't remember his name, but I was around there at that time, and it wasn't what changed Cabramatta, what changed the landscape. What changed the value of the commercial property there in Cabramatta itself was the Vietnamese community itself became the police force that enforced not physically, but they pushed the gangs out. It was the own Vietnamese community that pushed the T5 gangs out and all the other drug-related gangs out of the area, because they just had enough. So I sort of liken it to that, and this is what the real estate industry needs to do: is we need to have a collective voice and push these charlatans out of the industry. Right. So unless we've got those two elements, or the higher as I say, how can I put it? Trying to be very diplomatic here. It's very difficult to be very diplomatic, but the higher you go in our industry, the more they want to hide this shit. But they've got to be chopped down at the knees. Because otherwise it's not going to be change. Change has to come from internally, as well as having a strong policing infrastructure by fair trading. Otherwise, it's not going to happen.
No, it's a shell game otherwise, isn't it? That's exactly right. And talk about shell games, this is another example. Victorians putting a property on the market may soon have to pay for the building inspection in a government push to save buyers time and money. And I'm thinking, so this is where you actually get that cheap marketing report that actually doesn't tell you much at all. And now they're going to institutionalize it. And I was thinking, well, we had somebody on our show quite recently, Edwin, who had a very strong opinion about all of this. And I suspect she wouldn't like it.
Well, and I met up with Jenny on Friday. Had coffee with her at North Sydney, and we were talking about it. And when I told her about this, and she just rolled her eyes and said, "My God, basically from the frying pan into the fire. Why would you want to put this? Why do people think that this is a great idea?" Why would the politicians down there think that this is such a marvelous idea? But it comes back to, as to the discussion that we're having with Jenny on Friday when we were having coffee there at North Sydney, and that is that the ignorance of the governments. In essence, they mean well. Like Dominello, he meant well. But he's ignorant when it comes to the outworking of how the shit works. Like I say, you bring a regulation, you bring a new legislation or new regulations or a new or an amendment to something, and the industry will find 6 ways to Sunday to navigate around it. Right? So unless you understand that principle, it ain't going to change. So Jenny and I, we were talking, and it was Jenny's dog's birthday too, by the way. So it was we had an interesting time with the dog there. And what Well, what I said to Jenny was, I said, listen, what we need to do is collectively we need to talk to the minister in order to make real changes, because this has to be a ministerial level change. If it's not gonna happen from a ministerial level position here in New South Wales, we can't change whatever they want to do in Melbourne, Victoria, but and because the discussion then moved towards how can we protect buyers? How can we better protect the buyers? Because the selling side of the industry has just absolutely hijacked the process. Dominello meant well, but he was ignorant, smart in a lot of other ways. May have been a smart lawyer, but very ignorant with the outworkings of the industry. And he played into the game of the of again the leading bodies that were driving this BS building inspection reports and a way to make it easier. All that's done is just made it harder for buyers, and all that's done is just facilitated the sale process for vendors and selling agents. But this is an adversarial game. This is a game where you either understand who and what you're getting in the ring for, because if you don't, you're going to get smacked in the face every single time.
Well, I think the real estate virus, as I'm going to call it, the real estate virus, has quite a significant amount of capacity to re-evolve and change and tweak. So whenever you try and make a tweak to try and help the industry become more balanced in favor of the people who actually need to use the industry, the real estate virus migrates and morphs and changes and mutates and finds ways around it, because effectively the greed that's actually at the heart of the industry and the bad practice of a small proportion of the total operators across the industry are there right at the center. So I agree with you, unless you get real good understanding, one, of what's actually going on rather than what people think is going on, and then two, get top-down ministerial buy-in to significant change, and then three, get the leaders within the industry to start fighting not for themselves, but for the people who are required to use their industry, you are not going to get real change. So the real estate virus can outmutate any regulations from politicians.
Look, it's just one of those inherent things that we've got to work. Yeah, we've got to work through, and these committees and everything else that they put together. You've got committees that are run by auctioneers, committees therefore to deal with the underquoting legislation that are run by auctioneers that perform auctions for people that are blatantly underquoting, and they know themselves that the people that they're representing, they've got dummy bidders in at play. It's a mess. So we really need to bring, as I was saying to Jenny, we really need to bring a strong light to that, because a lot of viruses, they get killed with a very strong sunlight. So this is what we need to do. We need to shine very strong light into these dark areas. Otherwise, it's nothing's gonna change. It's just gonna go from bad to worse. And it's so what we want to do to close this segment off is what we want to do and what we propose to do. And I've roped you into it as well, Martin. So you've got no choice. I said, look, Martin and I are all in to do whatever we need to do and to help to put whatever education program we need to do, and to have Jenny, to have you in on a show a lot more to educate the masses in ways. And she's also going to be having very strong and very poignant conversations with the conveyancing fraternity, potentially to boycott any building and pest inspection reports that are provided by selling agents. Now, that would be interesting.
Absolutely. Well, maybe we should get her on a live show with you sometime soon and continue to press that, because I agree, until we actually get some significant change, we're not going to see any improvements. And in fact, that real estate virus will outmaneuver everybody. Let's just look briefly at the numbers before we finalize today's show. So this is the domain data for the Sydney region on the 9th of March, there were 24,385 properties listed. A week later, 23,706. And Edwin, you can look at the chart here and highlight the fact that, it's an interesting trend, but can you read much into it at the moment?
I think so. Given everything else that's gone around, and don't forget there was a lead up to the hike. There was a lead up to the issues and the cost of living, and we've had a very significant retreat in the numbers. Although it's still higher than 2025, but it's come back considerably. I think it's given all the noise over the last few weeks, we've got a retreat in properties on the market for sale. So, in my opinion, it looks like a very early retreat because those numbers in volume-wise are significant.
Well, it's very interesting because the official story, as published in the newspapers, was that listings were rising. So I have to say that there's something about words and figures differ here because, these numbers are the ones directly from Domain. They are not rising. And so there's something going on. And I actually, again, through my one-on-one conversations, more and more people are saying to me, we're twitchy about what's going on. What we are thinking is we're not going to move, we're not going to buy, we're not going to trade up, we're going to just sit and wait. And I think that probably the uncertainty is part of it. I am still seeing, though, some property investors saying, we are trying to get out because we think that prices are going to fall later and therefore, particularly in Melbourne, actually, of course, as we keep saying, and therefore I want to get out and try and cut my losses. So we'll see. And talking about Melbourne, this is the story in Melbourne. So on the 9th, 31,340 properties, 31,340. A week later, when you look at the data there, 30,634. So once again, the numbers are going down, which is rather opposite of what a lot of the media coverage over the weekend was suggesting. In Brisbane, 2,988 on the 9th, 3,093 the following week. So there in Brisbane, guess what? More listed. Only a small increase, but a list increase anyway.
It is still very insignificant in comparison, and some of the stuff, like I said, there, the values are just absolutely left me gobsmacked. And I couldn't get on the plane quick enough to come back to Sydney. Dusty and I decided to catch the last plane out, and we did.
Very wise, absolutely. Looking at the auction numbers, you can see there we got the 7th of March, the 14th of March, and the 21st of March, and you can see the lift in the number of auctions, although again the clearance ratios weren't particularly flash, as I highlighted in my earlier show. And if you look at the numbers here, well, this graph does again show you that it's wandering around there, but still it's not hugely strong, is it?
It's not, and a lot of my colleagues and the people that we talk to are just saying that look, properties are taking longer. Whereas over the last month or two, you get a lot of properties that would be sold well and truly before the auction, but now they're just taking longer and they're actually going all the way through. So the numbers are sticking there a little bit longer. So adding on to the numbers that we count. On a week-by-week basis, but still, we're still tracking a lot lower than 2024. So it's really, the numbers of, if we're talking 1,000 and above, it's something to really discuss and chat about. But look, the problem has been for the last 12, 13 years, the mainstream media and everybody has based the whole property market on auction results, which is bullshit. It's only a small sample, but yet just about everything gravitates. There's even punch-ups at barbecues because of the auction numbers.
Absolutely. Well, you and I have argued for a long, long time that they tell you very little, and I think ever so much more so at the moment. On the rentals, interesting to look at the 9th in This is 9th of March, of course, in the Sydney region, 8,843. Following week, 8,778. So a slight fall. And in Melbourne, on the 9th, 9,850. A week later, 9,839. And I have to tell you that the latest data on availability of auction of rental properties, I should say, is still very, very compressed, not least because a lot of property investors are putting their property markets for sale, for auction or for private treaty, and so they're not available. And, the story of the rental sector and the stress in the rental sector is still the part of the property story that the mainstream media doesn't want to go near.
I tell you what I've been privy to over the last week is 3 developments that absolutely I'm dumbfounded, really. It's good in a way, but it's really bad when you think about the fundamental structural issues of where we got to, right? Where you've got developments. There's a development in Burwood that has 50 studio accommodations. 50. I mean, this is nothing more than 22, 25 square meters, and you've got everything in that room. And there's a development there that's got 50 rooms like that. Saw another one that had 19, another one that had 25, more out west. And they're going to start popping up everywhere. In a way, that's a solution. But can you imagine, Martin, what we've been led to 2 decades ago, everyone was aspiring. 3 decades ago, you were still aspiring to have to be on a quarter-acre block. 2 decades ago, that went down from your quarter-acre to your 750. 15 years ago, you went down to 520. 10 years ago, you went down from 520 to 440, 450. Now we're down to 280. This is the land, and now people are young families are going to aspire to be in a 1-bedroom studio that's no bigger than 25, 28 square meters. That's crazy. This is what I see out there, what Dusty and I and the rest of our team see out there. And sometimes you just want to sort of drop to the ground, grab your knees, put your head between your knees and just cry. There's a lot of pain out there, Martin, and it's really not discussed. Everybody talks about the joys of making squillions and we beat the record prices, and we and chest beating of broke the record by 20% at the auction, blah blah blah. But this is where the reporters. This is where I would love to grab the reporters and take them and show them what if not them, possibly their kids are going to be living in.
Absolutely. And as I remind everybody, think of the noise, right? Because these newly constructed environments are not constructed very well. Noise travels, particularly at night. And it's almost impossible for people to live well in such a small space. So this is a serious potential social issue, but also potentially a health issue as well. And I'm afraid that, again, this is not something which is being discussed. It should be discussed. It's a policy decision driven by a very narrow set of logic, which is build more quick, build high quick, build small quick, and hang the consequences. And unfortunately, the consequences are going to be borne by real people, real families, not just in the next few years, but in the next 2 or 3 decades. And I think we will rue the decisions that were taken for short-term political gain. And unfortunately, the people who made those decisions probably won't be around at the time. But this is laying a bear trap, and I'm very concerned about it too. Now, as we come to the end of the show, Edwin, you've got a very important thought here in terms of your tip for the week.
I think right now, with everything that's been going around and all the noise and political and otherwise, global, I think it's a time that we all need to just stay focused. And now is not the time to change strategy or course. Um, you know, we just got to stay focused. I have to repeat this to myself. I've been repeating this to myself. Also, with Dusty and the rest of our team, in different strategies that we implemented late last year, early this year as well. And we just, regardless of what's happening around, and even more, there'll be a lot more noise. All right, we just have to stay focused. And this is the tip. Whatever you plan to do, just stay focused, and things are going to, like we said before. I've been saying, things aren't broken just yet. Things aren't broken yet, but we need to leave 2025 behind, jump into 2026, but stay focused. Because if we lose the focus, then we're going to start reverting back to should have, would have, could have, and that doesn't help you to get ahead.
Very good advice, Edwin. And I think I would just add to that when you actually come to make that decision of whatever it is, particularly if it's property related, make sure that you do actually do the full due diligence and the full calculations and take account of all of those variables, rather than just going in with a hope and expectation that property prices will always go up and interest rates will always come down. Because what we're seeing at the moment, with the degree of uncertainty around the place, is that things can change and can go quite adverse. So it's worth just building in buffers for all of those things. And I would just, in closing, remind everybody that so far, Iran has not been really focusing on the other oil route out of the Middle East. But if that was to be also brought under fire, then of course the events in the Middle East would have more significant ramifications for longer. And so those externalities suggest to me that people should be a little bit conservative about their financial management at the moment, and expect the unexpected, but also don't be totally dissuaded, but make sure you've got your buffers built in. Edwin, very important show again this evening. Thank you very much for all your work on the slides, and keep safe, keep being able to get petrol to get around, and I'll look forward to seeing you next week.
Yeah. Keep building your bunker, and as I said, you're a lot closer than me.
Indeed. Take care. See you soon. Bye-bye.
Take care, man. Ciao.